So I'm going to put my slides up and work on this as I'm talking, because that's what we do. We make sure that things are running no matter what. So I'm going to talk a little bit about technology and finances, and I'm going to talk a little bit as if you were opening a new firm. Now, what we're going to talk about is relevant to a firm that's already open or a firm that you're opening. So what I'm going to talk about are the importance of your finances, and not only understanding your finances, but protecting your finances. And there we go. Protecting your finances and knowing what your finances are, what your money is, where it's coming from, where it's going. One of the important things when you're thinking about your law firm is really being realistic about your revenue, not just, well, if everybody bills 2,000 hours at this rate, that's the money that I can expect next year. You really have to think about what the revenues have been, what the history has been with those people. So if people are supposed to be billing 1,400 hours, but they're only billing 1,000 hours, you're going to budget with the 1,000 hours. And when you're talking about your expenses, and particularly if you're starting up a law firm, what you really need to understand is you have to have a very good pro forma budget. And that's one of the things that we start out with when we're helping attorneys start firms. You have to know not only what it's going to cost for your attorneys, but you also have to know what you need personally to take care of your obligations. So what do you need to make in order to make your mortgage? And all of those expenses need to come into play when you're planning, when you're looking at financing, or if you're looking at expanding or bringing in a practice group. You really have to be very, very, very clear on what it costs for you to have an employee, what it costs for you to have an associate, and where the profit starts, where you start regaining your expenses and starting to make a profit. So it's really important to understand where your money's coming from, what you need to spend your money on, and where you're going to get that funding, certainly in the beginning, or if you're a contingency firm or something like that. You have to be very clear about your finances. That's number one. A lot of times we just kind of go through, well, I made this money, so I'll take this amount of money out. That's not very efficient for your longevity of your firm. A lot of people don't like to budget, but you really should be budgeting. The other thing that you want to be really careful about, and it's easier in larger firms, but in small firms you can still do it. You really need to have checks and balances in your accounting department. And this is one of the things that the smaller firms sometimes don't pay enough attention to. They are saying, well, I've been working with this person for 20 years and there's no reason why I need to look at my bank account or I need to make the transfers. I trust Diane to do it. She's been doing it for a long time. Well, you don't know if Diane's going to have a grandchild in the hospital and need $5,000 in order to pay for the specialist and not have it and have access to your accounts. You don't know what I would do in that situation. You don't want to put me in that situation. You don't want to allow me to borrow from your account. And that's what happens a lot. People, maybe they start using drugs, or maybe they have some kind of emergency and they're like, I'm just going to take this money and put it back next month. Don't allow your employees, don't set them up to do that. That's really what's important. So what you want to do is you want to make sure that you're reviewing your bank statements. That's the easy one, right? You used to get paper bank statements and you would give it to the owner of the firm and it would be sealed and they would open it up. They would look at the bank statement. They would say, everything looks fine. I recognize all these expenses, and then it would be reconciled. Now you can, as an owner of a firm, you can go in and look at your bank every day if you want to and what's cleared. You need to do that. You need to take responsibility for really looking at what is coming into your firm and what is going out to your firm. Do you recognize all of those vendors? And it's really easy to make sure that you're doing that simply by reviewing your activity in all of your accounts. You don't need to give access to your accounts to everybody in your accounting department or anybody in your accounting department. There are different access levels at banks. You want to make sure that you aren't giving anybody access to transfer money out of your trust account. Period. In a small firm, the owner should get a report that says, we need to transfer this amount of money out of the trust account and go into the operating account that accounts for these bills and these collections. And again, this is all, we can all do this virtually. You can do this from anywhere, but you need to be able to be the person that's wiring that money. You're the person responsible for that. Do not allow somebody else, because it's easier for you or you're in a different country, to wire that money on your behalf. Do not allow somebody to, I've had clients where they have trust account checks and they have a signature stamp and somebody is stamping those checks for them and sending them out off of their trust account. That's just unnecessary in our world today. You can do an ACH, you can do an electronic check. All of these things are possible now in our virtual world. So make sure you're taking advantage of those. Your billing, make sure that you know who your clients are and you are reviewing your bills very carefully and what's coming in and how it's coming in. How are you getting your money? Are you getting it from a credit card now? How is it coming in and where is it coming from? And again, spot checking things so that they look right. There isn't a strange client or a client that you're sending trust money back to, whatever it is. Make sure that you're watching that. And then your accounts payable. You can do your accounts payable from anywhere now. There's something called bill.com. Your banks will do it for you. There are very, very slick and easy ways to have somebody enter all of your accounts payable and say, these are ready to pay. This is the money you have in your checking account. And you go in and click the button online that says, okay, pay this, pay this, pay this, pay this, don't pay this until next week. So all of these checks and balances are actually easier electronically than they were when everything was paper in your office. So make sure that that's really important for you. And the reports that you should be looking at, again, you can be running these now. People aren't using QuickBooks Desktop much anymore. You have to use, as an owner, you should have access to your books. You should be able to go in and see what's going on with your expenses and your income and your profits and loss and all those kinds of things. I highly recommend that you have a product that obviously gives you your profit and loss and your balance sheet for your overall health of your firm, and that's what your bank wants to, all of that kind of thing, your tax person. But then you have to really look at what your hours worked, billed, and collected are. And it's very important to know not just what's billed and collected, but how many hours did this person work? How many hours did you budget for them to work? How many hours did they work? How many of that was billed? And how much was collected? Because that's really what matters, is what's collected, not what's billed. So you need to look at those and you need to have reports that will show you that. And again, the new software coming out, which is web-based, as an owner, you should be able to go in and run this report when you want to. It's not something that's on a server in your office and only your accounting department can give it to you. You should be able to spot check these. The other thing is what kinds of cases you are taking on and whether those cases are profitable or not. If you're doing estate planning and probate, well, what kind of estate plans are the most profitable for you? What are your referral sources? Where are you getting your business? Where do you want to put your marketing dollars to support those referral sources? Again, all of these reports, all of this information is at your fingertips with the new SaaS-based software. You can get this information if you're programming your software properly. So these are kind of standard reports that I would recommend that you're looking at. And then we have to IOLTA accounts. The IOLTA accounts are I do whole speaking on this and training on this, and the IOLTA accounts are the place that attorneys get sanctioned and disbarred for across the country. So we support law firms across the country, and we find the same problems in a firm in Texas as in Maine, as in California. You need to make sure that you're not borrowing from your trust. So you're not saying, oh, on Friday I have payroll, so I know that I've entered time for these clients and it's this amount of money, so I'm going to draw the money out of the trust account. That's borrowing money. You haven't billed those clients. They don't know that you are taking that money and it's theirs. So make sure you're not borrowing from the trust account. Make sure you're not commingling your funds. Again, this is those, I only want to have one link on my website for people to pay, and it goes into my operating. And then I transfer it to trust if it's a trust reimbursement or something like that. No, clients are really smart. They identify with two different links. This is to pay retainer, and this is to pay this bill that's going on there. You don't want to commingle. Any money that has any income that has any piece of that income, part of your client's money must go into trust first. So make sure that you're doing that, and make sure that you're not commingling. You don't want to have your bank fees being paid out of your trust account. You don't want to give improper access to your accounts. That's when I'm talking about having somebody stamp your name and writing a check out of your trust account. That's, you should be, as the owner, you are responsible for your client's money, and you should be doing those transfers. And on your books and all that kind of stuff, make sure that it's listed as a liability, that you have your bank account, and then underneath the line it's a liability, and your CPA can talk to you about that. And then there's the record keeping errors. You must reconcile your bank trust account with your time and billing software. But reconciling your bank account with your QuickBook account makes no difference. Your clients think that they have the amount of money that's on their statements, and that's what you want to make sure you have in the bank. So you want to know where you're spending your time. That's tracking your time, even your marketing time, the value of your time, how much it costs to create your widget, and your widget is an hour or a flat fee. And remember that your bookkeeper cannot be disbarred for mishandling your trust account money. Can somebody tell me how much time I have left?
5 minutes.
I have 5 minutes left? Okay, thanks. Okay, so I'm going to do a little bit about technology, but Michael's going to talk a little bit more specifically because of all the AI that's required. So what you need is the basics. You need to have a word processing program. You need to have email. You need to have somewhere to store your client documents that's highly secure. You need to have some kind of research software, and this is where the AI comes in and it's real helpful. You need to have time and billing, you need to have finance, and you need to have some way of creating forms or automating your document production. So that's your basic. Anything over and above this, you certainly can have, but these are the things that you need to make sure that your firm has, and you're supplying it to your employees. Software now has to be virtual and versatile. It needs to be mobile. It needs to be secure, and it needs to be common, and you need to be able to get support on it. Versatile is obvious. It needs to be able to do a lot of different things, create the reports. Mobile means that your people should be able to track time on their phones. That's what I consider mobile. Not only can they use it at their mother's house, but they can also track time on their phone. Secure. This is really important. A lot of folks are using Dropbox and things like this, and I don't recommend this. I don't think it's created for securing your clients' banking information and your clients' finances. You need to make sure that you've got some kind of ultra secure software storage system. It needs to be common enough. When we're in small firms, we don't want to be the beta testers. We want to be able to Google, how do I do this in Outlook, and have an answer come up. So that's something that I like to be able to provide for our clients, is making sure that it's common enough that they can get support for it. And if they need to outsource it, they can outsource it. QuickBooks, if you're using QuickBooks and something happens, you can find somebody that uses that works on QuickBooks and that can do your books for you. Xero, not so much. Practice management software. I'm just going to talk. I'm talking very quickly now. I'm speeding up. I'm sorry. But the practice management software, in my opinion, comes in 3 different levels. You have the level of a Clio or a MyCase or Practice Panther or Smokeball, those that you need to connect with QuickBooks. Those really are created for very, very small firms. That is a firm with one owner or with two owners that are splitting the revenue equally. You cannot do complicated splits and originations and this person gets 15% of that. You can't do that with those small programs. You end up buying another program to do that for you, and you don't need to. The next level is the level that's really being really coming in, and there's a lot of things happening in this kind of middle, what I consider middle market. These are the software programs that have your finance and your practice management and your document management. In some cases, it's an all-in-one. You don't have to have Xero or QuickBooks. And those are the ones that are going to give you more robust reporting. And what you want to look at when you're looking for software is what you're going to get out of the software. You need to talk to your bookkeeper and your accounting folks about what software you're choosing to make sure that what you're having them do is possible on that software. And then you have the large firms. You have the Scaddons and the Kirklands and all of those kinds of things. And those are the kind of the 3E and the Adirant, the large firm. The other thing I'm going to talk about just for 2 seconds is servers. In a small firm, we do not have enough money to secure our client documents the way they need to be secured now in a house. Putting your documents and putting your information in a cloud-based system is not about saving money. It's about being hacked. It's about making sure that your client information is secure. The only clients that I've seen, the only clients that we've had that have been hacked have been on a server in their office or a server in another office that they're VPNing into. So just be very, very careful when you're pricing things out, what your risk, what you're willing to risk, because it's, I haven't heard of, OneDrive being hacked yet. Maybe it has, I don't know. So hacking is important. Securely exchanging your client information. Again, this is, even Outlook now, you can encrypt your emails when you're sending them. So making sure that not only you send information securely, but your client sends it to you securely. And tip, put it in your engagement letter that they're responsible for what they use. Separate your home computer from your family's computer. Just do it. Buy a computer for $500 for your family and let them do it. Training, train now, train later, train again. This software changes all the time. When we get new software, we learn what we have to do at that time. We don't learn the little nuances and the tricks and the specialties, again, like Michael is going to talk about. You need to get training on this constantly because everything is changing. So those are things that I think that you should be thinking about when you're in a small firm or starting a small firm as far as technology and finance. And I'm done. And I think it's Larry's turn.